The Namibian economy has since last year been faced with challenges which have led to a moderate growth. Growth patterns indicate that the economy has slowed down to below 1% from nearly 6% in 2015. According to the 5th National Development Plan NDP5 launched earlier this year, the decline can be attributed to contractions in vital sectors such as that of agriculture, which employed 30% of the workforce 3 years ago and has so far experienced 70,000 job losses. A 3-year-long drought led to low productions in crop and livestock farming. Due to good rains, the sector is steadily recovering. Along with agriculture, the construction sector shed 10,000 jobs last year as a result of less spending by government. In the capital alone, many construction projects have come to a halt. However, the Namibian economy is heavily dependent on the mining sector, which employs 2% of the population but accounts for 11% of the gross domestic product. Production will accelerate as a result of new mines and lead the way for the economy to rebound. The economy of Namibia is linked to that of neighboring South Africa, as the Namibian dollar is pegged to the South African rand. This week we are looking at the economic outlook in Namibia, and in studio to discuss this topic is Eric Van Zyl, research analyst at IJG Securities. Eric, it's great to have you on the program.
Yeah, thanks for having me. It's always a pleasure.
All right. Can you tell us, as we reach year end, can you give us a brief breakdown of some of the highlights of the year, economy-wise?
Yeah, I think that's should be relatively quick and easy. 2017's been quite a rough year, so there are a few proper highlights coming from the economy this year, or that we see in the economy this year. I think the first to mention would be agriculture. So we've had a decent rainy season, and agricultural production and output has improved quite substantially. Obviously, agriculture has a large impact on a large proportion of the population. So that proportion of the population that does rely on subsistence farming, they would have experienced quite a lot of relief from that. But in terms of GDP growth, agriculture is not such a major driver of GDP growth. The other highlight would be the mining sector, which has done quite well up until now. So diamond production is up quite substantially, although royalties and probably government taxes generated from the diamond industry are not going to be as good as what we expected in the beginning of the year. But production in terms of number of carats mined and so forth, that's been relatively good. As well as that, gold production has been very good, with the B2 gold mine exceeding, I think, all expectations. It's really been a proper highlight this year, and I think towards the end of last year already. As well as that, zinc, lead production also good. Uranium being a bit of a drag on the mining industry this year. We all thought Husab would come online a lot sooner than what it has, and we only expect full production to be reached sometime next year, or possibly only in 2019, which should be something to look forward to, and that will definitely benefit GDP growth, or contribute quite strongly to GDP growth when that does happen. But for now, uranium prices remain depressed, so at the moment, towards the end of this year, probably not much to be expected from that sector.
All right. Now, taking all that into perspective, is it safe to assume that the economy is well on its way to recovery, or are we still on the decline?
Yeah, that's quite an interesting question, because I've seen that quite a lot, that a lot of people have been making noises that the economy has sort of turned around, or rounded the corner, as they say, and is on the way up. I'm not 100% convinced on that. If you do look at the GDP numbers that are coming out from the NSA, obviously they're quite preliminary, they do get adjusted quite a lot. But there are still a number of sectors in the economy that are languishing quite severely, construction being the obvious one. Construction, the numbers posted for Q2 in 2017 are in line with about 30% of what was posted in December or in Q4 2015. So a significant decrease in construction activity, as well as that wholesale and retail trade is almost 8% down as well. And these are big line items in the national accounts. Fishing industry has been growing very poorly or slowly of late. Manufacturing is also languishing or stagnant. So a lot of the secondary and tertiary sectors are languishing, have not yet posted positive figures. That doesn't mean that they haven't rounded the corner. It just means that these numbers haven't come through in the GDP figures. But when we look at our IJG Business Climate Monitor, the latest one is August, there's also not too much to be overly positive about there. The monitor's still sort of struggling in recessionary territory. And I think from IJG's perspective, we do expect to see 2017 as a recessionary year. We'll have to wait and see whether that actually materializes, but that is the feeling that we're getting at the moment. So we're not seeing that much positive. I don't think we're declining further per se, but we could just be in a stagnant phase. And that is a concern that we have entered this sort of low growth environment, similar to what South Africa has been seeing over the last decade or so. And then that it would be quite difficult to actually exit from that environment.
No, but many are quite saying that it's a world phenomenon. You know, most countries are going through this and all that.
Yeah, it has been. So Europe has been posting better numbers now of late, but for a 5-year period, they've been struggling. Similarly, the States has been, for the last 2 years, posting better figures, but before that, they were struggling as well. It's not always reflected in the stock market, though, but on a GDP basis, there's definitely been this worldwide languishing. Japan's been languishing for the better part of a generation. So it's not a unique Namibian picture, but the current environment here has very much been a mixture of external and internal forces. I don't think you can pin it on only internal forces or only external forces. So the economy has overheated. The key drivers to the economy have been slowing. So government revenue has disappointed, and foreign direct investment into the country has slowed as well. But I mean, that's to be expected as well. We had 3 major mines being built at the same time, of which the last one, Husab, was completed last year. And you do tend to see a rebasing after that. That's also some of what we see in the construction numbers. Obviously, construction of a mine is a large activity and contributes to a lot of construction activity. And once a mine is complete, then that activity ceases. So to continue off of that base would have been quite difficult to achieve in any case. So yeah, it's not only internal factors. Obviously, you've had commodity price slowdowns, which does have an effect. South African economy struggling, which does have some sort of effect on us, with the rand depreciating probably at a rate quicker than what it should have on a purchasing power parity basis, and that contributing to inflation levels in Namibia being higher than what they would have been had that rate of depreciation in the rand been at normal levels.
All right. Before we get to the rand, I have one more question on our sectors here locally. Our president, Kenko, recently mentioned that by mid next year, our economy would have recovered. With all these sectors struggling, like you said, could we trust him on that one?
I think it's a tricky statement for the president to make. I can't forecast where we're going to be mid next year, he spends his time on a lot of other things. He doesn't just look at the economy. So, he might well be right. We're not 100% sure, but I don't think it's a statement that needs to be made. I think the statements that need to be made should be more in line with what we are going to do to ensure that the economy gets to that point where we've recovered.
on the rand, after yet another surprise cabinet reshuffle by South Africa's president, the rand is chopped against the dollar. What are your thoughts on that?
Yeah, so the rand has been quite volatile over the last few years, and especially with the cabinet reshuffles prior to, or seen since, say, December 2015, when the finance minister was removed for the first time. The rand has been quite volatile, but if you do look at the magnitude of the shocks with each subsequent cabinet reshuffle, it's been less than what it has what it was when say Nene was removed in December 2015. So the market has sort of gotten used to this, and to some degree I think the market's priced in this expected volatility in the rand. So I think if you actually get a positive political outcome when the ANC has the elective conference in December, you should see the rand strengthening somewhat. Then again, if the market deems the outcome to be negative, you could see further weakness. But there is definitely a measure of volatility currently already being priced in the rand.
What will the long-term effect be of this?
Yeah, so the rand is likely to be volatile at least for the next 2-year period. So then in 2019 we see general elections in South Africa, after which we get clarity on policy going forward, possibly for the next 10 years then. So up until that point, I'd expect the rand to be quite volatile, to remain quite volatile. Obviously that has a knock-on effect on Namibia as well, as we are pegged. If the rand does depreciate in that 2-year period, it could lead to quite an uptick in inflation. So yeah, it's going to be a volatile period. It's a period of high uncertainty, and that's once again a period where it's exceedingly difficult to forecast exactly where we're going to be. Forecasting a point in time is a gamble.
So basically what you're saying is that even if the Namibian dollar is linked to the rand, we're quite safe from what's happening currently in South Africa, in the economy and all that.
No, it has a direct effect on us because of the peg, yeah. So, a lot of the positives and negatives do get imported with the currency. So if South Africa does see some rand strength, inflation going down further, it could mean that interest rates get cut further in South Africa, at least. It seems at the moment that's what's on the table. Should we see interest rate cuts in South Africa, Namibian growth languishing, it is highly possible that Bond will drop interest rates further here as well, which will have a positive effect on the Namibian economy. So we are quite highly dependent on what is going on in South Africa at the moment. If the rand blows out, if the rand depreciates rapidly, then there's a high likelihood that the South African Reserve Bank will raise interest rates, which will mean that bond will have to follow because there's no buffer between our repo rate and theirs. Then we could see interest rates spike here in Namibia at a time when the economy is languishing, and that would probably be the worst thing to happen.
All right, let's look at fuel prices. We have not seen an increase or decrease in this regard for months. What does that mean?
So that's been largely a factor of the rand movement and the oil price movement.
So it goes back to the rand again.
So that comes back to the rand again to a large extent, and then the underlying oil price. The oil price has been relatively stable, if we can say that. It's been hovering between, say, 48 and 58, which is quite a large range, but it's been within that range, and seeing the currency also relatively stable for the majority of the year. I think, as well as the smoothing mechanism that the Namibian government applies to the fuel price, that's led to quite a stable fuel price for 2017. It could change quite quickly as well, should we see currency depreciation, or the oil price increasing quite rapidly. But for now, it's been relatively stable, and I think that's underpinned, it's allowed inflation to some extent as well to stabilize.
And somehow that is a good thing for Namibians?
Yeah. So for all Namibians, I think a lot of us travel great distances, so it's some relief that the fuel price isn't increasing, as well as that it's an input cost in the production of many of the products that we consume. So we import a lot of what we consume, as well as that products that get produced within Namibia. Namibia Breweries produces beer and ships it from Windhoek to the north of the country. Obviously, the fuel price is quite a big input in that process. If that stays stable, then the price of beer stays relatively stable. And obviously, it has a similar effect on a lot of other goods.
The Namibian Statistics Agency says that meat prices, continue to increase. Can you maybe tell us, from economist's perspective, what are the leading factors contributing?
Meat prices have been increasing at a time when agricultural production has improved. So one could be led to assume that agriculture is doing better. There's a lot more grazing for cattle and sheep, and that meat prices might come down in a situation like that.
That's what one would expect,
But following a drought, as the one that we've just seen, during a drought, a lot of farmers have to get rid of additional livestock. So the carrying capacity of their land decreases, and they actually have to get rid of quite a lot of livestock. That actually drives meat prices down, because there's a lot more meat on supply. At a time like this, when you've just come out of a drought and you're going into a period where you're expecting good rains, farmers would be selling less cattle and slaughtering less cattle in order to rebuild their herds to sustainable levels. As well as this, we've seen continued demand from the external world, South Africa and Europe, for Namibian beef. So we've actually seen quite a lot of cattle marketed, but a lot of this going to export markets, so not being slaughtered within Namibia, which means that we're competing with those countries when it comes to price. So the cattle that do get slaughtered here have to fetch a higher price then. So you've got these two factors working in tandem and leading to meat prices escalating at, in excess of 10% year on year in some cases. Fish has actually been quite interesting. Fish prices have been increasing much more rapidly than meat prices have been. As well, I think largely due to a demand-supply mismatch. On the other hand, you've had bread and cereals prices actually decreasing, which brings relief to a large proportion of the country, as well as this is a staple food. So I think the consumers that do consume quite a lot of meat are probably more able to deal with slightly higher meat prices or the higher inflation in meat. And the consumers which aren't able to consume a lot of meat in the first place have been benefiting from relief provided by lower breads and grain prices.
Let's look at Moodys, the rating agency that recently downgraded Namibia's economy. Our head of state led some cabinet ministers to the UK, where they met some officials from Moodys, where our cabinet members, expressed discontent towards the fact that they downgraded our economy. Moodys officials decided that they're going to be coming here next month, to assess the situation on the ground. That should be quite interesting. What do you say?
Yeah, I think it will be quite interesting. I don't know if Moodys is going to find much, new information here. But I think, the government officials that did, confront Moodys on why they downgraded Namibia, cannot really, there's not that much that they can really do. Moodys is an autonomous agency. They have to, remain so in order for investors trust their decisions. If they're influenced by what government says and not by what government does, then they'd lose all credibility. So in their opinion, what government's saying and what government's doing are two different things. I think what has been said is being done sounds pretty good, but what the actual figures are producing or are saying, that's been sort of the opposite. You've seen this rapid increase in debt to GDP, budget deficits coming in way bigger than expected on subsequent budget releases. So that's not really a very positive picture for an external investor. And at the end of the day, that's Moodys' client. As a country, we're not Moodys' client. They need to make a decision on the credit worthiness of the Namibian sovereign. So it's not really government's place to interfere with their decision. Yeah.
Right, but does this happen often, where countries are ungraded and, they're not quite happy with the ratings?
Yeah, it does happen. I don't think, I think countries might display a sense of disappointment or something, but I don't think a lot of countries actually go and take on the ratings agencies. It's not really their place to do that. The government should be focused on what exactly is being said, checking whether they agree with what is being said and whether that is actually correct, and if that is, implementing the reforms necessary to actually get us back on track, to get us back on a growth environment. At the moment, we're in an environment where GDP is growing quite slowly, but our debt stock is ramping up quite rapidly. And that is, probably the primary suspect when a credit rating agency does come to look at us. That's the first red flag that they do see. So government should be more concerned with implementing their fiscal consolidation reforms that they've mentioned that they are doing to some extent. I think just the extent is probably not enough for Moodys.
All right, Eric, it's great talking to you, man.
Yeah.
And that is all from our side here at our TV studios in the capital. However, you can share your thoughts with us on this discussion on our social media pages and SMS line, of which the number is 555. Until next time, from me, Joseph Sheefeni, it's goodbye.